Hello everybody and welcome to episode 5 of my weekly fortnightly update and Q&A. I'm Mads, a property developer with over 150 million quid in completed projects. My day job is to build super homes around the world for billionaires and royal families. And here at home in the UK, I've started a passion project to build a 100-unit property portfolio starting this year from scratch using none of my own money to prove that anybody can do it. In this video series, I start every one of these videos by answering your questions about property development and investment. So if you've got one, please drop it in the comments below. Then I'll share a challenge or something big from the week that we've faced in one of our developments and how we overcame it. Hopefully there is some learning from that. And today I'm talking about why we bought this building in Kent, which is the latest acquisition in the 100-unit challenge. It's a Victorian building that houses the Boots Opticians, and we'll go into the details of that shortly. Then I'll talk about what's happening in the rest of the 100-unit challenge pipeline. Look, if you're new here, I started in a branded yellow Volkswagen Beetle selling buy-to-lets in North London. 20 years later, I'm a pretty experienced property developer delivering global trophy homes and now sharing everything that I've learned along the way. This series is really about giving you unprecedented access to the usually secretive world of high-end development and showing you deal by deal how to build a property portfolio from zero. Whether you're just starting out or getting ready to scale, these strategies will apply. All right, so here's my YouTube. 147 legends following it on. I've done 16 videos so far. If you're totally new to this channel, I'd recommend checking out a couple of these. This first video down here, how I built 150 million pounds worth of property, is generally my story, my backstory if you want to learn more about me. There's a video here about how I lost half £500,000 trying to start an insurance company. I've done some of my earlier development projects. I've talked about this 100-unit challenge. I've talked about the project that we're doing down in Portugal at the moment. Buying properties with no money down, exchanging without financing in place. A day in the life. This summer, I delivered projects in Portugal, London, and Copenhagen. So what was it like doing that? And last week, I talked about the project I just mentioned in Copenhagen, actually, which was a good old-fashioned standard flip. 100% return on capital, 250K clean profit in 5 months, 4.5, 5 months. So give that a watch if you like. Let's go to the next video here. And let's see, I actually got no comments on this. So if you have a question, anything at all, feel free to drop it in one of the comment from this video and I'll answer it next week. Okay, so why on earth did we buy a Boots in Kent? I know in a recent video I talked about exchanging contracts on a purchase without actually having bank funding in place. And that's definitely a calculated risk. However, generally, I am quite risk averse, and that is something that I've learned the hard way after a couple of decades in the game. And the beauty of buying commercial property with development potential is that the commercial unit covers the debt repayments. You're buying something with income. So whilst we can get on with planning out the development for the rest of the site as a long-term view, the debt repayments are covered from the day one. And I like to refer to this kind of deal as an asset management play rather than a typical development play. Time is not ticking in the same way that it does when you have I guess what you would call a typical flip, where time is literally money because your margin is eroding due to your finance costs the longer the development takes. With something like this, when you can buy an asset that's income producing, and from day one, it's more than covering your debt repayments. And then it allows you the benefit to focus on the strategy that can add you the most value. Now, this is not a game about in and out in 6 months or in and out in 12 months. This is maybe a in and out in 3 years or in and out in 5 years play. But in terms of your workload and how much effort and time and focus you need to put. I mean, time is your most valuable commodity, and I'm pretty busy with a lot of the other stuff that I got going on. So for me, deals like this are great. They're safe. I'll go into the numbers in a second. But if you look at a commercial project, the leases are typically long. In this case, we bought the project for 320K. just as the 15-year lease that Boots has was coming to an end. Now, that lease was running at 40k per annum. So that is £3,333 per month. We raised 70k from investors, ultimately to fund the project, and the bank came up with 270k net. They came in at, I think we used Interbay, and it came in at 6.8%. So we're paying around 1,550 per month. So already we have £1,835 cash flowing being thrown off this project into your pocket every month. You have to remember that commercial projects, the leases are typically full rent and repair, which means that maintenance, any kind of you can't classify as improvements, any kind of usual repair, maintenance, hassle, crap that you deal with a residential property or your residential tenant is within the lease of the commercial tenant. Plus, they're long. This one has just come off 15 years. We're just renewing it now. I don't know how long it's going to be, but it's going to be at least 5 to 10 years, which means in that 5 to 10 years, we know that we're making 1,850 whatever pounds it is a month profit, which can pay for all the architects and the planning advisors and whoever else we need to then figure out what we're going to do to add value to the site. Now, what was attractive about this site for us was that it's a corner Victoria, this is Victorian building in Kent, in a lovely seaside town, where the Boots Opticians is on the ground floor and they occupy, their current lease takes the whole building. But you have to remember that an optician's, when they signed a lease 15 years ago, everything was everything was paper-based. So they used to have filing cabinets and whatever else to store all these, optical records. But now, of course, everything's digital. So you don't need all this other space. And we knew that. And that's partly why we knew that when we came to negotiating the lease with the agent for Boots, what we wanted was to get back the upper floors, which they were just using for storage, which we can then repurpose as offices or as residential or whatever we decided on doing. So that then allows our income to keep coming in. We get the upper floors back. So it's an easy, quick win where we can add further value to the development stack and get more income coming in. But then thirdly, on this site, there was a large flat roof at the back. I think the flat roof is probably about 1,000 square foot. And there's definitely potential to build another 2 stories. So there's another 2,000 square foot of development potential. And whether that becomes Airbnbs or offices or more commercial space and some capacity, I don't know yet. But the beauty is I don't have to know that yet because time is on my side. And that's why I love deals like that, because I can buy it. You do the hard work in the acquisition stage. You buy it and you sit back and you can asset manage your way to enhance profitability. I love deals like that, and I think that it's a fantastic strategy in today's market. You have to remember that with commercial properties, stamp duty is way less. No maintenance charges, no late night phone calls, no all the crap and all the labor regulations that are coming into place just don't apply. And it's such a simple and smart way to own assets where you can almost, figure it out as you go. Of course, you're not going to buy something without having any idea what you're going to do. But normally there's a few different strategies. And if you go in for like a development where you're going to think, I'm going to buy this, I'm going to do this, and I'm going to sell it again, you need to know exactly what your development strategy is. You need to know exactly how many days and how long it's going to take you for you to do all these different items. You need to be sure you're going to get those permissions, because if you don't, there's no way you're going to be able to raise the capital from investors to actually action these, to be successful in acquiring it. You can't sort of say to an investor, well, I think I might do this, or I think I might do this. I'll see what happens. They'll just think, man, this guy's a waste of time, and they don't respect the time value of my invested capital. But when you buy a commercial asset, for example, which is income, it doesn't have to be commercial, anything that's income producing, and this one is throwing off, is a 12% yield. So we're already 5% above what we're paying to the bank. So the business model really is, don't worry about it. We have 5% surplus income coming through. We see immediate potential to create alternative uses in the upper 2 floors, and there's a hope value add on the flat roof area at the back. So, and there are also great deals to hold long term. And I'm not really a portfolio kind of guy. My whole career has been about property trading. I find that for me, trading is the best way to remain in control, because I'm a firm believer in timing, in that if you're going to dispose of something, it's all about property cycle timing and making sure you're disposing at the right time. And we've learned that the very hard way, because we have developments in central London and Belgravia that are worth 15% less now than they were 10 years ago when we completed them. So we've been renting them out for 10 years and they're now worth less, which is a tough pill to swallow, but a valuable lesson nonetheless. So I will gonna do a full video on this site in early December and go down there and walk through it and see what we're going to, and talk about the different options for it. Good morning. Here we are in Deal on the East Coast. It's our latest acquisition in the 100-unit challenge. This is all tied up and it's in legals. It's fully funded. It's ready to go, but I haven't actually seen it yet, so gonna go check it out. All right, so here's the back of the unit. Find out what this door is for in a bit, but I'm guessing it's a rear entrance for boots, which we could hopefully repurpose as a residential or an office access up here. So we're right on the high street here. Estate agents here. Guys running a red light. See, there's the building. So you can see there's 2 units up there, tons of space at the back to do something with it. But I just wanted to share the possibilities about these kinds of deals. And I tell you, we found this opportunity from a direct mailing campaign, and we actually direct mailed somebody about another property. But then when we spoke to them about the property that we were buying before somewhere else, they mentioned, oh, that sounds very similar to this that we have on the other side of the country in Kent. And it just goes to show that there are just so many ways to find opportunities. And it's about going out there, it's sticking to the strategies that you know that work. It's about following up leads. It's about knowing what your game plan is in terms of, because if your game plan can be based on rental income with potential value add, you're always going to be okay. You know, it doesn't have to be, you don't have, I just don't want to lay awake at night worrying about the planning competition coming through. And if it doesn't come through, the whole deal is scuppered. You know, you have to cover yourself on that basis. And I think maybe when I was younger, I would have done that, but now I have no interest in doing that. So there'll be a full video coming through on that, but I'll show you more about it. But highly recommend commercial property, income producing, future rental potential, future development potential. That's a great paradigm for any developer out there. Easy to fund, easy to finance, easy to hold, and it's all about asset management. All right, cool. Right, let's get on to the other properties that we got going on in the 100-unit challenge. All right, so here we have our other properties that we have in the pipeline at the moment for the 100-unit challenge. Here we have our first one in Tedworth in Surrey. And this one is driving me slightly around the bend, if I have to be honest. We took an option agreement on this earlier this year, and we have now been rejected 3 times in planning. We have been incredibly accommodating to the planners. They have been, in my opinion, actually I won't give my opinion, but I feel that this whole planning process has been completely political. There's been an enormous amount of opposition to the planning application that we put in, which for a simple 3-bedroom house, identical to all the other houses that are there, which is now sitting on the same size plot as all the other houses out there. You know, we've signed an option agreement for a larger plot, which is abnormally large for the area. The donor house has given off a plot size which is identical to all the other plot sizes in the area, and we've gone for planning for something that is also identical to all the houses in the area. And for me, because the NIMBYism in this part of the world is completely off the scale, unfortunately, and I think it's very clear to see in this council. I think we've had 25 letters from residents to the council opposing it. I think on the second application we had 32. On the first one we had 29. So we are going to appeal, and we're going to appeal because we feel that our application is completely with merit, completely fair, completely within the realms of the local council schemes. There's a RASC scheme there in particularly, and we think we have a good chance of winning because fortunately NIMBYism doesn't count for anything when you go to appeal. Well, it shouldn't, but it's unfortunate because we've been fighting this now I'm filming this today on the 20th of November, and we've been fighting this for nearly a year. And you know, we could have, if the first or second one went through, we could have had halfway built now, and there could be a family moving in early next year. So you know, it's a disaster. I mean, the GDV on this one is 3.5 million, which would be the value of the house when it's completed. I've spent £17,420, which I funded myself because I don't want, even in this challenge is about funding, building the portfolio with other people's money. I don't want to risk anybody's money on the planning phases. So I'm covering that myself. And then when we get planning, I've then got a 50% equity investor in place, so they will then reimburse me for my planning costs, take 50% of the value of the site, and then we'll go through. We'll probably either look to sell it on with planning, but more than likely we will build it out ourselves, or we will sell it as a self-build custom home directly to the whoever purchased the house on their behalf, so they'll be able to spec it out how they like it. They can work with our designers. It's very much a US model, which I think will pick up a lot over here. And then the next up, we have another option agreement down in Surrey. We've just been for our second round of pre-app. Again, some very non-committal. I mean, we do pre-apps half the time as a mark of respect for the council and the planners and to hear their thoughts on our proposals, but everyone is just so negative about anything. This is a 3-home scheme, where at the moment there is just one small house. And believe it or not, the council are actually trying to move us towards building a 6,000 square foot whopper, which is what matches the rest of the houses on the street. But to me, that's a bit ridiculous. You know, the country doesn't need more 6,000 square foot houses that will sell for 4 million or so. What we need is more family homes. So this scheme has got a 4.5 million GDV. We do have something up our sleeve on this one, which I can't really talk about now because of the planning process, but there are options on this site. So we're now preparing our planning application, and then we're going to submit that probably in January 2026. But unfortunately, I am fully prepared for going to appeal because I know that's what's going to happen. And then we got our property in Kent that we just bought, and I just spoke about earlier in this video, and I'm going to do a full video on that coming up. That one's got a GDV value of 550. We bought it for 320. Like I said, we're going to renew the lease, the Boots lease. We're going to free up the upper floors, create revenue from them, offices most likely, and then we expect to get a considerable planning gain from the flat roof area, which is not something that we will probably build out anytime soon. I think it's more about getting the planning gain, and then we'll decide what to do with it. Again, time is on our side, no stress. And then we have a mixed use block down in just outside Newbury in Berkshire. This is 8 units, 5 retail, 3 resi. We believe we can get another 6 flats on this block. which will take the value of the site from 1 million or just over 1 million to 1.5 million. And again, this is yielding at just over 10%, and there are fantastic asset management plays here. We could do storage facilities at the back. That's something that the area needs. We could we'll go in for planning at some point to knock the whole thing down and to build a much larger mixed retail resi scheme. We might reposition a lot of the retail units. At the moment, it's a bit bitty, so we can fix that. But the beauty of it is that we can do it all in time because it's yielding 10.5, just under 11%. Our debt is at 7.1. So we are close to exchanging contracts on that one, and I'll be doing a full video on that one when the time is right. All right, cool. Let me hop on to some stats this week. I do these stats because I think it's quite interesting to sort of follow my journey. So I'm doing the 100-unit challenge and see how that, transpires into numbers, because raising investment is about getting attention, and being able to tell people about what you're doing and about telling them how you do it, gaining confidence in your skill set and your model, whatever it might be. So this week I had 3 people reach out to me via Instagram wanting to invest. If you want to invest alongside me on anything, you can just DM me through the Instagram. It's @Mazdal. DM me invest. That means we've now got 38 investors on our investors mailing list. So whenever we have a new project, we shoot it out through the mailing list. Mentoring clients. This is I'm not starting this November the 1st. I am starting this Q1 2026. But basically this is about helping a small handful of killers who want to get out there and move the dial on the development game. So if that's you and you want help with doing your first deal, you've got a few deals and you want to do bigger deals, you've got a particularly big deal you want help with, whatever it is, I am open to helping you with doing that. All I ask is that you are going to not kill, but you will do whatever it takes to move the needle on those items. It is about what is it about? It is about succeeding. We will agree where we're going to go, what we're going to achieve, and then we will set out and we will bloody execute. Right, Instagram followers. So last week I was at 5,207. I am now at 5,804. So what's that? 600 people. Some people are listening. LinkedIn followers LinkedIn is crucial for investors. A lot of family offices on there. They can sometimes be a bit of a pain, but in my opinion, but they are good to be known. It's all about finding the right one and finding the right partners. So I'm on 3286 there, so it's like an increase of about 50. I should add a column here showing the percentage increase. YouTube subscribers, how many legends have I got? 147 subscribers. It is a tough gig finding Instagram subscribers, but it is a fantastic free tool for information. So if I was you, or if I was setting out, or even now, if I want to learn about something, I'm on YouTube researching the hell out of it. And if you're, that's the beauty of things nowadays, is that you can really learn so much for free by watching YouTube. All right, cool. So what's next week? Next week, I am back in Portugal. I'm in London. I'm in Copenhagen right now, actually. I'm in London this week, and then next week I'm in Portugal, back at our Ronaldo project. I am going to be there. We are gunning like crazy to hit certain milestones before Christmas shutdown. So I'm doing that. What else do I need to do? I am also in relatively advanced stages about talking with a fund, about partnering with a fund to deliver on some of our more ambitious schemes. I have to tell you, I've been trying to find a fund partner for about 15 years, I would say. And I've had tens of meetings in that time to find them, but it's always very difficult to find the right match between your ambitions and the fund's own investment mandate. You do find that a lot of time they're like, yeah, no, we'll do deals like that, and then you bring the deal and they say no, for whatever reason it doesn't fit our investors, blah blah blah. So it's about finding a fund with the partners who literally align with you perfectly, and making sure that if you get in bed together, you'll be able to push something through quickly, because speed is the name of the game when we get into acquisitions. Look, that's it. I think that's my focus for next week. If you've got any questions, please just drop me a message in the comments field below. I'd love to answer them. It can be about anything. It can be about your own project. It can be about starting out. It can be about what we're doing down in Portugal. It could be what we're doing in the States. Could be, man, I'm open to anything. Have a banging week, and I'll catch you in the next one. Cheers.